All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world. Happy Thursday, everybody. Today is August 7th, 2025, and happy Tariff Day, everyone. Today's the day. The reciprocal tariffs are going into effect for countries all over the world. The tariffs that were announced last week after the 90-day delay, after Liberation Day, after the build-up to Liberation Day, it all culminates with today. And to be honest with you, the bond market's pretty quiet. You know, the bond market initially threw a fit after Liberation Day. Everybody was panicking. Oh, my God, the end of the world as we know it. Dogs and cats living together, mass hysteria. Well, market kind of took everything in stride. We're actually, look, stocks significantly higher than we were back in April before all this started. And now the bond market's pretty quiet. So I guess that's all behind us, or maybe we just haven't seen the net effects yet. But even as that's rolling in, we had this new set of tariff announcements came out yesterday, most important of which was the 100% tariff on chips. And, you know, these were announced late yesterday after the close. Everybody was freaking out. Oh, my God. There goes the QQQs. The NASDAQ is going to crash. The AI bubbles popped. And I remember looking at this, and I posted on Twitter. I said, carve out for NVIDIA in 5, 4, and I never made it to 2. I mean, the ink wasn't even dry on this tariff story. And right away said, oh, companies that invest in the United States like Apple and NVIDIA, they're going to be exempt. And then, of course, since the definition of exemptions from the tariffs is anybody who's investing in the United States, we didn't actually say what counts as investments in the United States and what doesn't count as investments in the United States. So they basically announced this massive tariff on this vitally important piece of equipment, and then they said it applies to pretty much nobody. It was like Dr. Evil, you know, when he was telling everybody to get out, but then he's like, not you, Frau, not you, number 2, not you, random henchman holding wrench, not you, random henchman arbitrarily pushing buttons. Like, we're just going to exempt everybody in the room. You're kind of like wondering who's going to be the Scott Evil in this scenario, right? Or he was like telling everybody to stay, all except one person. Who's going to be that one company that pays the 100% tariffs? Is it going to be AMD? Is it going to be a Samsung? Honestly, I don't know. I'm wondering, but he's carving out pretty much everybody, which seems to defeat the whole freaking purpose of the tariffs to begin with. I don't know where he's going with this. I really don't. But I do know he's not going to do anything that is going to prick that stock market bubble. If there's one thing his actions have shown us over the last few months, it's that nothing stops this train, as Lynn Alden would say. The bubble's going to keep inflating until something else pops it. Even while all that was going on at that same silly dog and pony show in the White House yesterday, we had Apple came out and they announced $100 billion magnificent dollars in U.S. investments. Look, we've seen this play from Apple before. They come out and they make all these promises about investments and they placate the politicians and they pose for the cameras. They take their picture. They'll exchange some gift with the president. In this case, what looked like a freaking 24-karat gold bar that they just gave him. It's okay, though. We put a little piece of silicone glass on top of it or something. I don't know. It kind of looked like a bribe. Not going to lie. Like, here's a gold bar with a piece of clear something on it. Don't worry, totally not a bribe. But look, Apple's never going to spend the money, right? They did this during Trump's first term. They promised, oh, yeah, we're going to have Foxconn build this big factory. We're going to make iPhones in the United States. How's that going? 6 years later, 8 years later, that ain't happening. So we've seen this from Silicon Valley before. I would love to see it. I'm hopeful of the reshoring of manufacturing. I want to see those factories get built. I want to see people in the middle class who don't want to play in a casino, who don't want to climb the corporate ladder, knocking over anybody in their way. People who just want to do 9 to 5, clock out and go home and be with their kids should be able to afford a modest lifestyle if they so choose it. So I'm hopeful that this manufacturing comes back, but I'm doubtful that this cast of characters is going to be able to provide it. Let's just put it that way. And for now, the U.S.-made iPhone remains an elusive pipe dream. Maybe one day it's going to happen, but it ain't going to be any day soon. We've got an interesting Intel story this morning. President Trump is out in the press this morning calling for Intel CEO Lip-Bu Tan to resign. WTF is going on there? I have a couple of ideas what might be happening there, but we'll talk about that one as well. SoftBank came out and pretty much admitted that whole Project Stargate thing was really just a bunch of hot air and a silly press conference. And if you bought stock based on this Project Stargate story, congratulations, you're the fish at this table. They're describing some conversations have slowed about that $500 billion project. And then they're like, oh, no, it's going to be $2 trillion. But we have $100 billion we're going to spend right away. 8 months later, they haven't spent a single dollar and they haven't signed a single agreement. Go figure. But those conversations that have slowed, there were some interesting talking points in there. We're going to cover that. The Bank of England cut interest rates by 25%, 25 basis points, a quarter of 1%. They cut interest rates. But it was an interesting vote. Talk a little bit about what happened there. President Trump also doubled his tariffs on India. He is targeting the Indians because of their purchasing of Russian crude oil. He wants an abrupt end to the war in Ukraine. And he is going to tariff the heck out of anybody doing business with the Russians in order to get it. The Indians are pissed. I'm sitting here wondering if you're going to do this to the Indians, why wouldn't you do it to the Chinese? And would that complicate whatever trade negotiations are ongoing with the Chinese? Either way, it looks like the message has started to get through because late yesterday they announced that President Trump is going to be meeting with President Putin, possibly President Putin and Zelensky at some point soon. I don't know, guys. Hold your breath and wear a helmet for that one because the last time he met with Zelensky in the White House, well, it resulted in hundreds of billions of dollars worth of debt breaks getting eliminated in Europe and some of the biggest defense spending packages we've ever seen. So this one could go either way, but let's try to remain hopeful, I guess. I don't know what to tell you there. We've got the executive order for private assets is going to be signed today in 401ks. Guys, I've been warning about this for months. Be careful what you let your guy put you in. They are looking for suckers to buy these investments because they are not fairly marked to market. They know the losses are coming and they want to get them off their books. Well, this sounds like a great time to democratize access to these illiquid, mismarked assets. Also, that executive order is expected to apply to both real estate and cryptocurrency. So Bitcoin is running this morning a little bit. We had a nationwide outage at United Airlines last night, grounded flights all over the place. It looks like they have resolved that issue. It was related to some decrepit old software. The company saying not a cyber attack, but the airline infrastructure continues to do what it does. Upstart Holdings, an interesting story there. It's not a huge name, but it's an AI lender. You see, they have their little chat bot. You apply for a loan. The AI approves or denies you. They partner with a bank like Cross River Bank of Teaneck, New Jersey, who I've talked about quite a bit. That bank automatically approves the loan, and then Upstart immediately buys the loan off of the bank's balance sheet. And, well, that stock took a beating yesterday. What might be going on there? I mean, you think that whole business model, gee, what could go wrong with all that, right? Yeah, that stock was down double digits yesterday because loans are piling up on their balance sheet. They're having a hard time finding people to buy them. Well, this is a great time to democratize access to those things, isn't it? And last but not least, we got Nipon Life, a Chinese life insurer, the largest Japanese life insurer. I'm going to take some heat for that one. They have $28 billion in unrealized losses on their balance sheet because of losses in Japanese government bonds. Sounds an awful lot like what happened at Silicon Valley Bank in 2023. Seems to be happening at Nipon Life. We will cover that story, guys. We have a lot to talk about this morning. Why don't we shrink my big melon of a head? And let's see what's going on in the world of finance today. Don't forget that like button and that subscribe button for the YouTube algorithm because we do this one every day. So come on back tomorrow. Have your coffee with the melon heads as we go through markets. And right now, markets are up. As always, in lieu of absolute catastrophe, number go up. Today is no exception. The S&P 500 is up by 42 points or about 0.2% higher on what? Nobody knows. The Dow is up 253 points, about 0.57% higher. And the NASDAQ leading the way higher, 0.8% higher, 186 points to the upside because, yeah, we got tariffs and the tariffs apply to pretty much nobody. Looking over at the U.S. dollar, the Dixie is pretty much unchanged here, down about 3 basis points, 98.2. Now, we got an interesting story, maybe resulting in a little bit of this downside on the Dixie this morning. The Bank of England cut rates to 2-year low after a rare revote. And there's Andrew Bailey, the head of the Bank of England there. This is a pretty interesting story here. The Bank of England cut interest rates to the lowest in over 2 years in a closer than expected decision that pitted the prospect of inflation hitting 4% against a weakening jobs market. 5 members of the Monetary Policy Committee voted for the quarter-point reduction to 4%, while 4 backed no change. That followed an earlier 3-way split that failed to reach a majority. It was the first time in the 28-year history of the panel that the 2 rounds of voting were needed to reach a presentable outcome on rates. So, split decision over at the Bank of England. They actually had to do a revote. The first vote was between do nothing, do nothing, cut 25 or cut 50. And it was 4 to 1. So they had to take the cut 50 off the table and then do a revote. And it ended up being 5 to 4 in favor of the rate cut. But it goes to show you there is some dissension in the ranks among central bankers over in England, not sure what to do. They've got high inflation and they have got a stagnant economy. In other words, the stag and deflation. Oh, yeah, that Keynesian phenomenon that isn't supposed to exist because you're not supposed to be able to have high inflation and high unemployment at the same time. Well, the Keynesians were wrong again about that one. And now the Bank of England doesn't know what to do with it because, well, they're all Keynesians. Central bankers just don't get down with the whole Austrian school of economics. I don't know what to tell you guys. And look, they did cut rates, but you'll notice rates are pretty much higher across the board. And pay attention, Federal Reserve. Pay attention, everybody who's like, my rate cuts, they're going to save my housing investments and my 15 Airbnbs that I'm leveraged up to the butt on. Look, they cut rates today, and every single interest rate on the UK yield curve is up in the green because the central banks do not control the entire yield curve, guys. They only control the overnight rates. And when you cut interest rates, sometimes you make people think inflation is going to make a comeback, and then they start demanding a higher interest rate in exchange for locking up their money. Well, that causes rates to go higher, kind of like when they cut rates back in September at the Fed and the 10-year yield moved higher. All right, we talked about the UK. Let's talk about the U.S. bond market here. We do have a mixed bag in our own yields. The 30-year Treasury is at 4.805. That's down by 0.5 point. The 10-year is at 4.229. That's off by 0.1 of a point. The 2-year is at 3.720. That's almost 2 points higher. And the 1 month is down about 0.5 point at 4.355. Not a lot going on in bonds. Once again, I'm really surprised how quiet the bond market is considering the tariffs go into effect today. Keep an eye on that one, guys. Looking over at the commodities board, we have got green everywhere. Spot gold is up by $15.50. $3,384.92 an ounce for spot gold. That's up by 0.45% this morning. Silver's having one hell of a morning, $38.38 for spot silver. That's up by about 56 cents or 1.5% higher. I like the shiny. Copper is up by about 1/3%. Platinum is up by 2/3%. Palladium is up almost 1.9%. And WTI crude is pretty much unchanged here, $64.39 per barrel for September WTI futures. That's up a nickel this morning. Now we've got Bitcoin is having a pretty good morning. Shown here is priced on Coinbase, $116,240. That's up by about $1,200 from yesterday. Looks like Bitcoin set to move higher here. I suspect the anticipated news of this executive order that President Trump is going to sign is what's driving the Bitcoin buying this morning. He's expected to allow cryptocurrency into 401ks as well as private assets and real estate. We'll get to that story in just a minute. But first, here is the big one. Trump vows 100% tariff on chips unless companies are building in the U.S. And they didn't say what the definition of building in the U.S. is, but I guess that's not really important right now. President Donald Trump said Wednesday he will impose a 100% tariff on imports of semiconductors and chips, but not for companies that are building in the United States. The announcement of new sector-specific tariff shows Trump ratcheting up his efforts to pressure businesses to manufacture their products in the U.S., but specifics about the plan, such as how much U.S. manufacturing a company needs to do in order to qualify for the tariff exemption, were not immediately clear. We're going to be putting a very large tariff on chips and semiconductors, Trump said in the Oval Office on Wednesday afternoon. But the good news for companies like Apple is if you're building in the United States or have committed to build, without question, committed to build in the United States, there will be no charge. All right, so how do you do that? How do you commit to build in the United States? How do you commit to build without question? Oh, yeah, sure. I'm going to build $1 trillion worth of factories. I don't have $1 trillion. but that's not important right now. Here's my commitment. It is unquestionable. Therefore, I don't have to pay the tariffs. Then all you got to do is stall for 3 or 4 years, wait until he's not in charge anymore, then cancel your plans due to unexpected difficulties, and problem solved. Well, Apple was also very busy in the White House yesterday. They announced additional $100 billion in U.S. investment. There's that build in the United States following Trump's iPhone tariff threat. And, well, I guess Apple doesn't have to pay the tariffs either now. Apple revealed plans to invest an additional $100 billion in U.S. manufacturing commitments during a press event at the White House with President Trump on Wednesday. The move follows Apple's prior $500 billion investment in the U.S. spending, which includes working with partners to build an AI server plant in Texas. Did they ever actually spend any of this money? To my knowledge, none of this stuff has ever actually happened. Shares of Apple, though, climbed 3% pre-market on Thursday following the news. Apple says that the $100 billion announcement includes its new American Manufacturing Program, or AMP, which the company says will incentivize global companies to build critical components in the U.S. As part of the investment, Apple's making a $2.5 billion commitment to produce all of the cover glass for its iPhones and Apple Watches at Corning's Harrodsburg, Kentucky manufacturing facility. The two companies will also work to open an Apple Corning Innovation Center at the plant to help develop and engineer materials and next-generation manufacturing platforms for future Apple products. Apple also says it has entered a multi-year agreement with Coherent to produce lasers for its Face ID feature for the iPhone and the iPad. Company's also touting what it says is end-to-end American silicon supply chain, which includes sourcing silicon wafers from Global Wafers in Sherman, Texas, for use in American chip factories, which haven't been built yet, working with Applied Materials to increase production of semiconductor manufacturing technologies, and getting semiconductors from Texas Instruments. Apple is further teaming up with Samsung to work on new chip-making technologies at its plant in Austin, Texas, as well as with Global Foundries and Amkor to bring more chip-making, manufacturing, and packaging to the U.S., respectively. Look, all this sounds great. It's awesome that Apple is saying they're going to do all these things, but Apple has said these things before and then never delivered on any of them. This is just Apple saying what the president wants to hear in order to get exempt from tariffs. And check out their stock. It's working. Apple stock was up 5% yesterday. It's up another 2.8% ahead of the open this morning, $219.25, up almost another $6, just because they said a thing. Now we got this story, and I'm pretty sure this is related to the whole chip tariffs and everything. Intel shares drop after Trump calls for CEO to resign immediately. This story just broke a few minutes before I went live. Intel shares were under pressure Thursday after President Trump called for chipmaker CEO to resign immediately. In a Truth Social post, Trump said Intel chief Lip-Bu Tan is highly conflicted and must resign immediately. There is no other solution to this problem. Intel dropped in pre-market on the back of that post and last trading 5% lower. So what is going on with Lip-Bu Tan? There he is. That's the CEO there. All right, first the cover story, what they're saying. There was a open letter was written by, I believe, Senator Tom Cotton yesterday to Intel's board of directors, asking them to look into Lip-Bu Tan's conflict of interest. Lip-Bu Tan has, at least he is reported to have had hundreds of investments in Chinese semiconductor companies. And he was also the former CEO of a U.S. company, called Cadence. And that U.S. company called Cadence just settled with the Commerce Department. I believe it was like $100 million settlement because they sold chip-making technology to a Chinese military college that was using those chips to simulate nuclear blasts. And, well, that violates all kinds of export controls. Well, Lip-Bu Tan was the CEO of Cadence at the time those deals were made. So there's all kinds of questions being raised about his loyalties, about conflict of interest. This guy's getting all kinds of money from government grants and CHIPS Act subsidies in order to build these factories. If his loyalty really belongs to China, then, well, that raises valid questions. Now, that being said, all of these issues were known before yesterday. What has changed? You may recall during Intel's most recent conference call, Lip-Bu Tan announced he was slowing down a lot of the capital projects at Intel. In particular, that one soundbite everybody said when Lip-Bu Tan said on the conference call, there are no more blank checks, meaning they're not just going to arbitrarily invest in anything. They are going to scrutinize their capital investments. Well, Intel is supposedly building all of these chip fabs that are going to go up in the United States. and all these big investments, all the CHIPS Act funding, right? A lot of what President Trump is pushing for and build your chips in the U.S. and let's make iPhones in the U.S. is dependent on these Intel investments. And those Intel investments are moving very slowly thanks to Lip Bhutan just taking over the company. And so now President Trump wants him gone. Is it because of the questionable loyalties and his history of Chinese investments? Maybe. Or maybe it's because he's not spending money fast enough and President Trump wants that to happen quicker. But either way, President Trump is on Truth Social saying, Intel, fire your CEO. And the stock initially moved down pretty hard. It has since clawed back some of those losses, down about 2.5% ahead of the open, $19.91, off by about 50 cents. Speaking of dragging ass on investments, SoftBank concedes Stargate project with OpenAI needs more time. Wow, I am just shocked that silly dog and pony show in the White House back in January ended up being a bunch of hot air. Really, this is my surprised face. Don't I look surprised? I really, it's palpable. SoftBank Group said it's taking longer than anticipated to get Stargate off the ground, conceding for the first time that the $500 billion AI tie-up in the U.S. with OpenAI is bogging down. The Japanese company is trying to forge a consensus with partners, including Oracle and Abu Dhabi's MGX. CFO Yoshimitsu Goto said during an earnings briefing, SoftBank expects to begin concrete negotiations for its first Stargate data center soon, Goto said. Well, isn't that encouraging? We expect to start talking concretely very soon. Wow. Take it easy there, champ. You're ripping about 90 here. We need to take our time to prepare a model for Stargate, he told analysts and reporters. A lot of parties are involved. Time is needed to form a consensus. In other words, they don't have consensus right now after 8 months. SoftBank founder Masa Son and OpenAI co-founder Sam Altman unveiled Stargate in January with promises to begin deploying $100 billion immediately. Wow, that's a number eerily similar to Apple's promised investment, but I digress. And to raise that to around $500 billion. Months later, it's yet to begin raising funds or building data centers. Some of the conversations behind Stargate have slowed due to market volatility, uncertainty about U.S. trade policy, and questions about financial valuations of AI hardware, Bloomberg News reported in May. That last bit is important there. Questions around financial valuations of AI hardware. That is depreciation. That is what is the big hiccup here, guys. And look, CoreWeave and Big Tech, all these companies, they're all out there using these straight line 6-year depreciation cycles for these H100 GPUs and all this hardware that they're buying. This stuff is not going to last 6 years, and it's not going to depreciate in a straight line. It's going to fall off a cliff and then level out. It's going to be worth basically nothing within 3 or 4 years. And so apparently this is one of the big hiccups, financial valuations of hardware. They're wondering how fast are they going to depreciate it? Are we going to tell the truth, or are we going to do what everybody else is doing and lie through our teeth and then 2-3 years from now report a sudden tsunami of freaking depreciation that wipes out all of our earnings for years? Well, either way, Project Stargate, it ain't happening anytime soon. Also, Trump doubles tariffs on India to 50%, sparking outrage in Delhi. All right, this is the war in Ukraine spreading to India. Interesting story here. President Trump doubled tariffs on Indian goods to 50% as a penalty for its purchases of Russian oil, escalating a fight with a key Asian partner and sparking outrage in New Delhi. Trump signed an executive order imposing a 25% tariff on Indian imports that will stack on top of the 25% levy he announced last week. The White House said Wednesday that the higher duty will take effect within 21 days, according to the order, providing some time for negotiation. Prime Minister Narendra Modi's government fired back after the announcement, saying the purchases are necessary for the nation's energy security and blasting Trump for singling out India when other countries are also buying Russian oil. Look, that's a valid criticism. If you're going to double tariffs on India, why not China? They're buying plenty of that Russian crude too. The nation's opposition leader, Rahul Gandhi, also lambasted Trump as a bully. Trump has given Russian President Vladimir Putin an August 8th deadline, that's tomorrow, to reach a ceasefire with Ukraine or face sanctions and threaten Moscow's key trading partners like India in a bid to secure leverage. While talks between U.S. and Russian officials on Wednesday didn't provide an immediate breakthrough, Trump said afterward there was a very good chance he would meet with Putin and Ukrainian President Volodymyr Zelensky soon in another bid to broker peace. Yeah. Okay. So a meeting between Donald Trump, Volodymyr Zelensky, and Vladimir Putin. The three of those guys in the same room. What could go wrong? I'm sure it's going to be a great day for humanity. Oh my God. So yeah, tariffs on India. They're going higher because Trump wants India to stop buying Russian crude. India's saying that's our call, not up to you. Things getting more expensive, folks. Okay. Meanwhile, we got another Trump story. Guys, look, this is not the bash Trump hour. That's not what I do here. Like, look, I voted for the guy, but this is the news. This is what it is. We got to report it. Trump to sign order, easing a path for private assets in 401ks. And I've been warning about this story for months. It looks like today is the day. President Donald Trump will sign an executive order Thursday that aims to allow private equity, real estate, cryptocurrency, and other alternative assets in 401ks, a major victory for industries looking for exit liquidity. I mean, looking to some of the roughly $12.5 trillion held in those retirement accounts. The order will direct the Labor Department to reevaluate guidance around alternative asset investments in retirement plans subject to Employee Retirement Income Security Act of 1974. That's according to who else? A person familiar with the matter who requested anonymity, of course. The department will also be tasked with clarifying the government's position on the fiduciary responsibilities associated with offering asset allocation funds that include alternative holdings. That is big there, all right? Now, they don't say what they're going to be. They're saying they're going to clarify the fiduciary responsibilities, all right? Because when you're a fiduciary, you are obligated to act in the best interests of your clients, period, hard stop, end of story, all right? You're not allowed to tell your client, hey, I recommend you buy this thing because the company selling this thing is offering me a very generous commission or a kickback if I put your money into it. All right. And that is a big question because this industry, these private equity funds and private credit funds, they are desperate for exit liquidity. They need to get this crap off their books and into your retirement plan as soon as possible because they know there's a reckoning coming in this market. And well, to do that, they are going to offer bribes and perks and everything to your guy to get your guy to convince you to put your money into it. Be careful, guys. Maybe there's going to be an initial surge of liquidity and maybe this stuff might shoot up very quickly if they do this and billions of dollars flows into it. But at the end of the day, this is money. These are assets that do not cash flow. Companies that don't make money, debt from companies that don't make money and therefore can't pay it back. And they want you to hold this steaming bag of dog shit. End of rant. Meanwhile, United Airlines saw massive delays after hundreds of U.S. flights were grounded due to a technical issue. Let's not spend too much time on this story, guys. United Air, they went down yesterday. Every United Air flight across the country was grounded. It was an error, a problem with their software that does weights and balances for their jets. It was limited to United Airlines, but some of the United Air delays have now spread to other carriers. The software issue has been resolved. They're saying it wasn't a cyber attack. Look, airline, air traffic control, all kinds of infrastructure issues over the last couple of years. This is another chapter in that story. I suspect we'll probably see similar stories like this in the future. United Air stock doesn't even notice here. Let's refresh this. It looks like it's up today despite this news. Yeah, it's up about 2%. So not a big deal for United Air, but there was a lot of unhappy travelers yesterday. Now, this story is pretty interesting just as soon as my computer cooperates. Here we go. Upstart stock takes a mysterious dive after earnings. What's behind the move? It's not so mysterious. This company is a bad idea. What these guys do is a bad idea. And, well, it's just coming back to haunt them. Upstart Holdings shares tend to take investors on dramatic rides after earnings, and Wednesday was no exception. This time around, though, Upstart's headline numbers looked solid, yet its stock fell about 19%. The artificial intelligence lending company topped estimates with its results, $257 million in quarterly revenue and revenue guidance for $1 billion, but disclosed a sharp increase in the amount of loans held on its balance sheet. Now, before we get any further, guys, I just want to clarify, Upstart is not a bank. Upstart is a fintech platform. They're an AI company. So what they do is they have their little chatbot, and their chatbot, when you apply for a loan, you type in your information, their chatbot reviews it and says, yup, this is a good loan, or no, we can't help you. Now, they partner with banks, in particular, Cross River Bank of Teaneck or Fort Lee, New Jersey, the sketchiest bank in America. that bank automatically approves that loan based on what this chatbot tells them to. And then Upstart or Cross River Bank underwrites the loan because they are a bank. Upstart immediately, like within seconds, buys that loan from Cross River Bank, and now the loan lives on the books of Upstart Holdings. All right. It looks a lot like a bank, but it's not a bank. Hey, how hard could it be to be a bank? It's really hard, actually. And Cross River is happy to do this because they are offering banking as a service. They basically rubber stamp these loans in exchange for a fee. The loan never sits on their books, so they don't care. That's how these guys do business. Now, the balance sheet component is one factor pressuring Upstart's stock. These loans are starting to accumulate on Upstart's balance sheet. The other issue, in his view, is that the company cut its forecast for net interest income to $65 million for the full year, down from $90 million. Now, net interest, that's the difference in what they charge versus what they collect in interest. So if they're issuing more and more loans and their revenue is going up, why are their margins compressing? There's something wrong with their business. Management offered explanations, but they don't seem to be swaying investors. In terms of the balance sheet, Upstart CEO David Gerard said the loans related to newer products. The company has a goal to transition most of the funding for these products off our balance sheet by the end of 2025, though deal timing is always hard to predict. So he's saying, we want to sell these loans. We want to get them off our balance sheets. Well, we're not sure when we're going to be able to do that. In other words, we're having a hard time finding people willing to buy these loans from us. This is starting to look like a liquidity problem for a not bank pretending to be a bank. Investors generally prefer when Upstart moves loans off its balance sheets. On net interest income, the lower expectations seem more a function of fair value changes in valuation rather than the net interest spread, El Assad noted. Now, that's interesting here. So remember, they were saying their margins were compressing, even though they're making all of these loans. Well, the reason their margins are compressing, the reason why they're making less net interest isn't because they're not charging enough interest. It's because the value of these loans is going down. In other words, people aren't paying them back. Delinquencies are piling up. These loans are to people who can't pay them back. Turns out their chatbot maybe wasn't that good at gauging risk. And the bank and their rigorous underwriting standards and review process, rubber stamping them, wasn't actually that good in gauging risk. Now these loans are piling up on their balance sheet. They're starting to take losses on them, and they can't find anybody to buy them. Oops. That's not good for the AI lending platform. That's totally not a bank, even though they behave like a bank. Upstart stock was down 20% yesterday on this news. Now, they're rallying this morning. They're up about 4.8% now that the opening bell has rung. So, hey, maybe that problem went away. Maybe they found somebody to buy it. Maybe this has something to do with President Trump's alternative asset announcement this morning. Maybe they're just going to park all those loans in your 401k. Know what is in your plan, folks. Read your prospectus. That's all I can tell you. All right, last one of the day. This is another one to keep an eye on. Nipon Life marks the record $28 billion in paper losses on Japan bonds. Pay attention, guys. This is pretty much what took down Silicon Valley Bank and Signature Bank and almost took down Bank of America in 2023. It doesn't mean they're definitely going to fail, but this is a problem worth watching. Nippon Life Insurance said the unrealized losses on its domestic bond holdings widened to a record 4.164 trillion yen. It's about $28 billion in June, as concerns about rising debt supply caused yields to climb. Paper losses on bonds at Japan's biggest life insurer increased by about 16% from 3 months earlier, according to Nippon Life's statement on Thursday. The firm has also been selling off its bonds purchased when yields were low and recorded a loss of 197.2 billion yen for such transactions. While the nation's insurers are big buyers of 30-year debt to match their liabilities, they can hold off on selling bonds until they mature. But if unrealized losses deepen too much, insurers may face pressure to mark some of their holdings as losses and have less room to invest in other assets. So this problem of unrealized losses, this means they're holding assets, they've lost money on them. Those assets, they're worth less money than they bought them for it, but they're not actually marking those losses on their books. They're pretending like it didn't happen. And so, they're out there and they're saying, oh, don't worry, our earnings are up 17% year over year. The only reason they have any earnings is because they're not admitting all the money they're losing, which is more than they're earning because of their losses on bonds. Now, why are those losses on bonds happening? because of this situation in Japan's bond market, the JGBs. This is the interest rate on Japan's 40-year government bond. And look at what it has done since the start of this decade. It's gone from 0.126% up to 3.311%. I don't know what percent increase in yield that is. It's a lot. Now, remember the inverse correlation between bond yields and bond prices. As interest rates rise, bond prices go down. Well, Nippon Life owns a lot of bonds, which means they're losing money as this chart keeps moving up and up. And does this look like a chart that's about to stop to you? No, it's not. Japan is actually raising interest rates. Japan is trying to limit the amount of quantitative easing that they're doing. They're taking their sweet time doing it, and they're causing problems, breaking things along the way. But this problem is going to keep getting worse. And it's just a reminder, guys, we're virtually 1 year removed from that panic. Last year on August 5th, when the Japanese yen suddenly surged in value and everybody was worried about losses on JGBs and the unwind of the yen carry trade, that problem is still out there, lurking, hiding in the balance sheets of banks and insurance funds. Keep an eye on that one, guys. So that's going on in Japan this morning. And, well, I just want to say thank you very much, Mr. Justin Evans, who says silver. That's it. Nothing more to say. I like the shiny. I got my Silver America right here. I actually bought myself a little bit of junk silver yesterday. Got some 90% quarters headed my way. I can't believe how low the premiums are on junk silver right now. You can get that stuff back a spot, guys. You can buy it for back a spot. It means you sell it for even further back a spot. But I like the shiny. By the way, guys, gold to silver ratio has been dropping. Looks pretty good on that chart here. I don't know if it's going to happen here pretty soon, but the gold to silver ratio, it went over 100. It's in the high 80s right now, blew down through the 90s. We could be heading for a point. Silver's got some catching up to do. I think silver, the gold to silver ratio, has a date with that 65 level that has been a floor for like the last 15 years. Anyways, I plan to trade a little bit of my silver for gold when that happens. But for now, I like the shiny. Thank you, Justin, for supporting the channels. I appreciate that very much. Madison Hypes, thank you, says, Professor Mellon, do high PE markets always come down? One way or another, they revert to the mean, all right? The high PE market, all right? She's talking about the price to earnings ratio. That is how we measure if a market is expensive or if a market is cheap. Now, the most common ratio out there is the Shiller PE ratio. And that Shiller PE is like the inflation-adjusted 10-year average of price to earnings ratios. All right, there's some caveats in it that kind of like smooth out the noise in the chart. And the Shiller PE ratio is at a historic high right now. Like, we're pushing .com level valuations here. Now, look, PE ratios always return to the mean. There's two ways that they could do that. All right, right now the PE ratio, it's like in the mid-20s. The historical average is something closer to like 16 or 15. Now, the price of the stocks could come down. That's one way the PE could come down, right? You have a crash in stock prices. That brings your PE ratio down. The other way you could have this correct is you could have the E go up. The earnings could go up astronomically. And when the earnings go up, even if the price stays the same, the PE multiple comes down. So the question isn't, will the PE come down? It will. It always does. The question is how, via lower prices or higher earnings. I'm betting right now it would probably be lower prices. However, if the Fed spins up that money printer again, if they start dumping cash into the economy as they're prone to do, then the E may come up. And those PE multiples or those prices would be justified in that rising earnings environment. So I don't know which one is going to happen, Madison. But right now, like earnings season, it's been okay. The consumer names have done very poorly. The big tech names did very well. Is that sustainable? I don't think so. But for now, that's the situation that we live in. Good question, though. Thank you very much, Madison. Appreciate the super chat, the support of the channel. Googly Eyes, thank you for gifting 10 Nobody Special Finance memberships. Well, that was very nice of you, Mr. Googly Eyes. Guys, if you received one of those memberships, say thank you to Mr. GE in the comments. That was very nice of you. And welcome to the Melonheads. Just a reminder, everybody, when you got those memberships, you get one free super chat a month. Feel free to use that. I will read and respond to your questions on the air. Thanks again, Googly Eyes. Zeeble Fritz says, U.S. reportedly forcing Taiwan Semiconductor to take a 49% stake in Intel. I did read that. I don't know why we really want Taiwan Semi to buy a stake in Intel, other than maybe we just want to improve the liquidity conditions at Intel, and then maybe that would get Liputan to loosen the purse strings a little bit if they're flush with that Taiwan Semiconductor cash. That is very possible. It's highly unusual for a president to come out and like insist that a company CEO resign and then insist that another country's company come in and take a stake in it. I'll be honest with you guys, it kind of gives me the creeps. It gives me the creeps what they're doing there. And again, it's not meant to be the let's bash Trump hour, but let's be honest, the guy's done a lot in the last couple of weeks that I just don't like, including this. I'd love to see Intel start building their chips here in the country. I would prefer they do it without subsidies, and I definitely don't want them to do it with a gun to their head. Thank you, Zeeble Fritz, for supporting the channel, sir. Robert Feeds the Machine says, living in your chat, paying my rent. Well, Robert, thank you, sir, for paying the rent on time. You shan't be evicted from the chat today, my good man. I appreciate the support of the channel and your participation in the chat. Shout out to everybody in the live chat. Also, hey, thank you very much, everybody, for the super chats today, for supporting the channel. Shout out to you guys on my Discord server and you magnanimous melon heads on Patreon and YouTube. Thank you guys for supporting the channel. Links down below to all that good stuff, should you feel so inclined. Don't forget that like button and that subscribe button on the way out for the YouTube algorithm. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.